just on behalf of both Discovery Bank and Visa, just a very warm welcome to all of the media who joined us here this morning. This is a really unique and we think groundbreaking collaboration that's been released today, called SpendTrend. We, as Discovery Bank, a year ago, did an analysis of our client spending for the prior year, and it was really aimed at giving kind of like interesting insights. So, which fast food takeout do you like the most, and which supermarkets or grocery stores or fuel stations do you most sort of usually use, and really kind of well received. But it sort of also highlighted the value of kind of data and the power of spend data in particular. And so coming into 2023, we've partnered with Visa, and it's been a completely kind of unique collaboration in the sense that it brings together probably the largest global kind of data set from a spend and transaction perspective with a very detailed demographic data set in the case of Discovery Bank, where we have completely unique insights into the behaviors of our clients, their kind of family composition, their kind of transactional level data that's quite unique, and that spans not just the bank but other areas of our business as well. So health and lifestyle through Vitality, driving behavior through Discovery Insure, and health data through Discovery Health. So completely unique kind of collaboration at a data level, and then the application of that is really in a number of different areas. So we've used it to help our clients navigate the kind of the financial health and well-being kind of space. We've used it to inform our products, but I think what's unique about this year is that we're actually using it to provide real context of what's happening on the ground in South Africa from a kind of economic and activity level. And we often hear about the kind of GDP growth levels and whether we're in or out of a recession, and those numbers came out yesterday. But the kind of the data that we've used and explored for this analysis talks right to what's happening on the ground, actual individual spending, and it does so in a really kind of interesting segmented way. So from mass market all the way through to the highest net worth kind of clients across the set. It also covers an interesting period in the sense that it's a 4-year analysis, so it's longitudinal as well. Obviously looks at 2022, which in itself is unique. We are barely out of 2022. It feels like a lifetime ago, but it's less than 10 weeks. So this analysis is kind of completely relevant from a time perspective, and at the same time, it's longitudinal in that it goes back to 2019. So it's actually pre-COVID, during COVID, and post-COVID. So you can actually see the kind of the trends emerging through that period, those that have stuck and those haven't, and what it's likely to play out in terms of the kinds of trends and projections for the future. So it's a retrospective on the one hand, but it also gives us, I think, a really interesting kind of path to what we can expect for the rest of the year in 2023. So on that note, I'm going to hand over to Lineshree Moodley, the country manager for Visa, has been our partner through this process, and Lineshree is going to make some opening remarks.
Okay. Thank you for that, Hylton. It's certainly been an exciting journey for us to get here and to provide insights and perspectives that we really believe are valuable to the industry. And I think Hylton did touch on that. As a company that operates, in over 50 markets in Africa, we're constantly working to look at how do we remove barriers and include more people into the digital economy. And we see data as being a key enabler in really providing us with those insights in terms of which path it is we need to take. When we look at the SpendTrend23 report, I think it's testament to the long-standing partnership that we've had with Discovery. And we're really proud to be able to collaborate with this to put insights into the market that we hope are going to stimulate both discussion and actions for our industry. So today, I'm actually going to talk through some of the key high-level trends that we see across the globe in South Africa, and I'll also tie it back to some of the key insights that we saw coming out of SpendTrends 2023. So thank you for your time. Just in terms of setting the scene, in terms of where we are, as the current global economic slowdown starts to deepen in 2023, we're soon going to see a refocus in terms of where are those opportunities for growth and recovery. From a CEMEA perspective, we believe this region is well poised to drive the next wave of growth globally. And we see that 60% of the next billion people that are added to the world's population is actually going to come out of the region. So these favorable demographics, a young, tech-savvy population, and a growing middle class, we believe are ideally positioned to actually fuel the next wave of growth. From a South Africa perspective, over the next few months, we do see some of the challenges remaining. However, we remain very optimistic when we look at some of the indicators that are coming out, that the economy will start to improve as we move into 2024. Some of the key things around deceleration in inflationary pressure, looking at the new energy action plan that will be driven between public-private partnerships, and also an improvement in the tourism industry. This is something I'll go into a bit more detail as we go forward. The SpendTrends 2023 report actually provides insights into what 2023 might look like, when we believe this year might actually start to unveil what the new normal looks like. And so this report, we're excited to actually share the insights with you, and we're hoping it's going to actually shape the future of what the industry looks like. If I get straight into it, in terms of the trends, the first broad trend that we saw, that there is a sustained consumer shift to electronic payments. We've seen this, at a global level, where the spend on electronically has been both stable and strong when you look at the data in 2022 as compared to 2019. What we've also seen is strong e-commerce growth. If you bring that to the South African market context, South Africa has experienced significant digital transformation. And those trends we actually saw pre-COVID, but through the COVID pandemic, they were actually accelerated. You'll see that 85% plus of consumers have reported either the same or increased spend when it comes to their debit, credit, and prepaid cards. From the study that we did with SpendTrends, we see that consumers spend on their cards has increased by 22% in comparison to 2019. The three biggest categories for spend has been in groceries, travel, and services. Now, when you look at groceries, it actually contributes to the largest share of the spend for consumers. But we also have to be cognizant of the fact that there have been inflationary pressures when it comes to food. So that could have contributed to it being the biggest part of the spend. The second one is on travel. And travel, I'll go into a bit more detail as a key trend, but I think two call-outs I want to make here. We saw an increase in the average basket size, but we also saw a decrease in the frequency of travel. And then when it comes to services, this was the second largest sort of spend category. A lot of things are actually incorporated in here, like beauty services, there's auto services, etc. The last point I want to make on this is that when you look at the different spend, the one is the categories that consumers are spending on. The second one is we saw a lot more consumers starting to shop online. And when you look at the trends from 2019 to 22, at the peak of COVID, that went up significantly. But as markets opened and consumers started to feel a lot more comfortable, they also started going more into stores. However, that being said, when you look at the 2022 number, we had a 13% increase in online sales as opposed to 2019. The second trend we want to go into is the recovery of travel. So here, once borders reopened, once restrictions were actually reduced, we saw this release of pent-up demand for travel just really unleashed. And if you look at the global economy, countries like Europe, they had an 11% increase in travel. in Q4 of 2022 when you compare to Q4 of 2019. If you're looking at the same time period, CEMEA and LAC the same, positive, strong growth of 9% for CEMEA and 4% for LAC. If you bring this back into South Africa, and once again to the SpendTrends report, South Africans are as eager to travel. We saw an increase in both leisure and domestic travel. Leisure travel increased by 14%, whereas business travel, sorry, not domestic, business travel actually increased by 24%. When we went further into the data, what we did see was that there was less frequency of travel across both those categories, both leisure and business. So, things are getting a lot more expensive. For example, the flights. And I know some of the detail we'll go through it in more detail later on. At the peak of the pandemic, we saw Namibia and Botswana sort of being key travel destinations for South African consumers. And some of the top travel destinations like the US, the UK, and the UAE have actually returned now that we have gone into post-COVID. The last point I want to make on this slide is around, if we look at domestic travel in South Africa, it actually contributed for a bigger share of total travel in 2022 than it did for 2019. So a lot more people traveling domestically. I think this particular trend is important for us because as the tourism industry really strengthens, it's really good for our economy, right? This industry really, it provides thousands of jobs. It develops the infrastructure of the country. So when this industry thrives, it's actually better for us as a country. The last trend I want to go through is the growing adoption of contactless and digital wallets. I think, over the last 2 years, there's been a lot of sort of talk around digital payments where you're looking at different peer-to-peer apps, you're looking at contactless digital wallets, and it's grown in both popularity and adoption. You see the key stat on the slide, 72% of all face-to-face transactions globally were actually contactless. And if you bring that back into the context of our continent, we see South Africa actually leading the charge for this, with more than 50% of all digital transactions actually being contactless. So contactless and mobile payments are really reaching new highs. And consumers started off by, it's a hygiene thing during COVID of wanting to do the contactless payment, but the adoption has become quite high. And as the user experience is also much better, there's more consumers actually want to use contactless payments. When we look at contactless adoption across the different segments in the market, we have seen for the mass affluent segment, there's been an increase, which is of 91%, which is big. However, it is not as big as an increase if you look at the other segments, like your everyday affluent, your high net worth. And this really highlights to us or brings to the forefront the fact that we've got to start thinking about things like education and making people or consumers understand that it's okay to use this type of payments. And the last sort of point around this is when we look at digital wallets, it has a multiplier effect on consumer spend. If you activate on the digital wallet, the more likely you are to actually spend and move all of your transactions into this type of a contactless environment. So why does all of this matter? I think when we look at some of the key themes I've shared today, as well as the insights that are contained in the SpendTrends report, it really provides some key drivers for us as we start to think about innovation and how we start to put together products and solutions and unique experiences for consumers. Some of these trends will form part of the conversations, not just for the financial services industry, also for, the retail ecosystem, regulators, fintechs that are newly entering into this arena as well. So the first one on the trend on sustained shift to digital, here we really think, or we believe that the entire ecosystem really needs to start investing in alternative forms of payment. You see, for example, going to retailers or restaurants, being able to pay with things like a QR code. When we look at the rise of travel and, how much of consumer spend is actually going there, we need to think about what are, the capabilities or the things you need to add into the overall proposition for consumers as they travel a lot more. We've seen examples globally with banks that are actually buying booking platforms and travel agencies using WhatsApp to actually do check-ins, etc. Digital wallets, I think we will continue to see an uptake in this. What is quite key on this is we need to keep pushing on education, especially when you look at certain segments in terms of, we've got to build the trust in actually using digital payments. And this brings me to the last point, which is something that, as a company, we're very passionate about, and that is securing this very vibrant ecosystem. So as your digital transactions increase, as your consumers go more online, so too does external threat. And it's very important that we partner on a global scale to actually secure the payment ecosystem. From a company perspective, Visa has invested over $9 billion over the last 5 years on fraud prevention and on cybersecurity. And what this means is that, real-time global technology to detect these instances that occur. So to close off today, before I hand over to Hylton, I think the challenge that we all sit with is, we're going to walk away from the session with all of these insights, but how do we make them real? And how do we develop solutions and propositions for consumers that are, they are convenient, they are cost effective, and consumers can come into the digital economy. When you go through the trends, you'll see that South Africa on this continent will continue to lead in terms of, the market and from a digital transformation perspective. And we've got to get more innovative in terms of the type of products that we take to market and the unique experiences that consumers have when they're interacting with the products that we put out. So thank you very much again, Hylton. I'm going to hand over to you.
Thanks, Lineshree. I'm going to maybe sort of, I suppose, pick up where Lineshree left off and delve into a bit of detail around the SpendTrend23. And essentially, the research itself focused on answering 3 questions. Firstly, how much people spend in South Africa, and broken down by segment and looking at the kind of the demographics, and in particular the kind of thinking around pre-COVID, during COVID, and then post-COVID. Secondly, what people spend on. So the actual kind of shifts that we're seeing in terms of spend categories and behaviors, and I think particularly important in the context of things like inflation and the effect that that's having on consumers in South Africa today. And then thirdly, speaking squarely to the Lineshree's point around how people spend. So the actual kind of the technology, the payment rails, the shift between cash and cashless and contactless and online versus point of sale, and the kind of, I suppose, the effects, long-term effects that we can expect post-COVID as a result of that. So the data set that our data scientists, analysts, actuaries have been using is incredibly rich in terms of the kind of insights that it provides. And essentially, if we start, just a few highlights, and obviously the detail is much more detail is contained in the report itself. But just to give you a sense of just some of the kind of high level results that we've seen. I think first and foremost, the kind of the COVID period and the impact that it had was obviously significant. If you look on the left-hand side, you can see that across South Africa in total, from a spend perspective, the impact was around about a 6% decrease from 2019 to 2020 in the Discovery Bank base, which we think had a higher kind of starting point, given our demographics at the time. That was right at the sort of the launch of Discovery Bank. The impact was even more profound, and you can see the sort of the impact of lockdowns. We then saw almost sort of the kind of whiplash in a sense, recovery on the back of that. Where today we are now across, and our client base is now, I think, quite representative of the kind of the broader South African card base, and that in itself is quite interesting, just given the kind of the growth of the base across multiple kind of income segments and demographics. We've seen a 22% increase relative to 2019 in 2022. So really sort of a strong rebound, strong growth, but almost making up, you could argue, all of the kind of the lost ground between the start of the pandemic and the kind of the end of the pandemic 4 years later. And I think it does speak squarely to the resilience of the South African consumer in many respects. And what's interesting is that you see this kind of effect across all of the different segments. In the case of the Discovery Bank segments, compared to the broader South African segment, we see that we're actually capturing the kind of the bulk of their spend. So on a like-for-like basis, we see that the kind of the spend coming through our client base, whether it's in the high net worth segment or the mass affluent segment, we're seeing a higher proportion of spend coming through Discovery Bank than the kind of the average across the market. And it talks to, we think, the primary nature of Discovery Bank accounts today, and the fact that our clients are using the accounts as their primary bank account. It's capturing a lot of the spend, but it also positions us quite uniquely for an analysis like this one, knowing that most people are multi-banked in South Africa today. So at a very high level, the sort of the recovery post-COVID seems to be very, very strong, and that's a positive sign, just in terms of kind of the economic resilience of consumers. What's very interesting though is when you look at the category of spend and where that's sort of settled post-COVID, and you can see through this graphic a few key points. One is that groceries continues to be the largest spend category, and that's continuing and that's increasing as a result of the kind of inflationary pressure that we see in that segment. And I'll go into a bit of detail on that. You can see in 2020 the complete dislocation during COVID, where travel effectively dried up. Travel you can see in green on the graph, and that kind of that significant dislocation that occurs in early 2020, where travel effectively ceased to exist on a global scale, but the relatively quick recovery, given just how significant lockdowns were and the impact of lockdowns, the effect of a return to kind of the norm in travel has been, and in fact, we see in 2022 travel being spend in travel as a category being 40% higher than it was in normal terms in 2019. So quite a strong recovery overall as a result of what we see as the sort of almost this pent-up demand and revenge travel concept. What is very interesting is also the eating out and takeout, and I'll go into a bit of detail on that as well. Also heavily impacted by COVID. One of the most impact, if you think about the industries that were most impacted, travel and eating out were probably the two most negatively impacted through the COVID period for a host of reasons. That has rebounded significantly, and I'll show an interesting correlation that we see now between load shedding and restaurants and takeouts, which in itself is quite noteworthy in context of this analysis. But you can see the kind of the return to normal segmentation and spend relative to 2019, and just that kind of that massive impact that COVID had in the interim. As we've said, groceries represent the largest segment of spending, and we've broken down in the report the kind of the habits of our clients when they spend in store versus when they spend online, and where most popular grocery stores are for Discovery Bank clients, and the kind of the difference between their people's preferences for in-store shopping and how that changes when they go online is also quite interesting, and talks to the kind of the service networks that the grocery chains have invested in South Africa, and just how easily accessible those tend to be. But the inflation rate from a grocery perspective is very, very important to recognise. If you look at just the kind of average basket inflation rate that's put out by Stats SA on an ongoing basis, there's obviously been a significant increase in food inflation. I think that's well known. You can see that the sort of the latest reported figure is about 12% from Stats SA in terms of food inflation, which is significant, and I think obviously cause for concern at a kind of economic level. But when you break it down in by actual segment, you can start to see how that breaks out and the kind of the ability for clients to respond, and how that varies by income segment. So at a kind of a high net worth category level, which would typically be the sort of income segment of around about 850,000 rand or more per annum. So sort of your highest income earners, through to your mass market segment, which is classified at less than 100,000 rand of household income in this analysis. You can see that the sort of the spend inflation in groceries, or the actual spend, which is more reflective of the people's spend day to day on their baskets, is just 4% at the kind of the top end of the market. And there you can see the ability of people to substitute in their basket and to respond and there's real scope for savings where required, or where they see that the prices have increased. At the mass end of the market, you see, the spend level on groceries at 47% higher than 2019, and that's highlighted by, when you go into the detail, just the less flexibility around choice of basket. You see the pronounced impact of items like brown bread, which is 80% more expensive at the end of 22 versus 2019, and so you can see the kind of the effect at an individual level, and then obviously the average in between, in sort of the mass affluent, everyday affluent segments, which reflect the kind of average basket that we observe in Stats SA numbers, where you see sort of a 12% simple growth rate over the period. So you can see the kind of the pressure that grocery inflation exerts, particularly on the lowest income earners in the analysis. From a travel perspective, and you can see travel is the third highest spend segment after services, which has got quite a large number of different services included. Travel, as we've noted on many occasions, went through obviously a significant reduction through COVID, and you can see just how sort of severe that dip was in the left-hand side graph. But you can also see, on the other hand, the kind of the strong recovery to levels which are now above 2019 levels in terms of actual spend. And I think what's interesting and important, and I think once again reflects the uniqueness of this data set, we can track where people are actually traveling, and based on where they're spending their cards. And so you can see the currencies, you can see the countries, you can see people literally crossing borders and then coming back and track their movements through their cards. And I think, often people remark about how they'll get an SMS or they'll get a notification to say, we noticed that you're outside the country, and is that you spending? We know it's you spending. We're just checking and letting you know that your card is secure. But the interesting insight is just the shift towards domestic travel in the context of South Africa. So what we see is that there's been a movement towards domestic travel in every segment, whether you're looking at the kind of the high net worth segment, everyday affluent, mass affluent, or mass market, where obviously there's less international travel in itself. Every single segment is reflective of this trend towards more domestic travel, and that is, from a long-term perspective, it's an important trend for the South African tourism market, in that we both are perfectly positioned, in a sense, to capture inbound overseas travelers, given the kind of the uniqueness of our travel proposition in South Africa, but then equally to capture the kind of increasing market share of South Africans as they've rediscovered, in a sense, the country and everything that it has for travel and tourism through the COVID period. And to the extent that we believe that will be sustained, if you look at the trend, that's a really positive sort of outcome post-COVID, and you can see in every single segment the sort of the impact of that coming through. What's interesting is the sort of the fact that the spend itself is a function, as Lineshree said, of not increased travellers necessarily, but increased spend and the cost of travel, which has increased significantly. And you can see in the case of flights, the average price of a flight in South Africa, domestic flight, has increased, between 35 and 50% over the period of the analysis, sort of pre-COVID to post-COVID, and that's reflective of essentially two phenomena. The one is the kind of input price of fuel, which is one of the key drivers of the kind of the cost of flights. That's increased 82% over just the kind of the last year in 2022 versus 2021, and capacity has reduced at the same time. So you've got a significantly reduced supply of flights internally in South Africa, to the extent that there are about 134,000 fewer seats per week in planes. It's about 800 flights a week fewer post-COVID to where we were in 2019. So about 40% reduction in capacity, 80% increase in kind of your single biggest input price, and the average price per ticket naturally it does reflect that. So the kind of the spend increase, I suppose, is to be expected. It also impacts the choice between domestic versus international travel that our clients face. But what's interesting is that while you would expect flight costs to make up a much larger proportion of the total spend on travel, and it does in general for South Africans, one of the kind of the interesting insights that we've gained through this analysis is that for Discovery Bank clients, it's actually the opposite. The weighting in the travel basket of domestic flights is actually reducing, and that's a function of the fact that we've done two things. The one is that we used to have a kind of exclusive partnership with Comair pre-COVID for discounted flights for our clients. Post-COVID, we've had to restructure that, obviously, with Comair no longer being in the market, and we've effectively offered discounted flights now on every single domestic flight. So whether it's Airlink, Semair, FlySafair, Lift, or SAA, every single domestic flight is now discounted on our platform. And so you can see the impact of that is a minus 14% impact relative to a 12% increase in the average kind of travel basket for the rest of the South African population. What's interesting is that Vitality Travel, which is our platform, now shows up as one of the biggest spend partners for Discovery Bank. And Lineshree made the point that banks are acquiring travel platforms, buying travel agencies. We built this from the ground up, and I think it was in response to this trend that we've seen, where travel is such a sort of strong growth area for South African consumers, and it's playing out particularly well in that sense. The other insight, which I think is really powerful from the sort of the data, and we've noted the kind of increase in spend on groceries and takeout, is around how people are sort of enjoying their time, and we've also combined data from Discovery Insure to analyze the kind of the trip information around our client base, and you can see that relative to 2019, there's been about a 16% reduction in the number of kilometers that have been driven by our clients, and that's a function predominantly of the number of trips reducing. So the average distance per trip is actually fairly constant, but people are driving less, taking less trips, and that is probably to be expected, and once again reflective of kind of a hybrid environment for many people post-COVID. That instead of driving into the office every single day, you're probably working from home at least one or two, sometimes more, over the course of the week. that combined with obviously increase in price of fuel provides sort of a strong and simple explanation for why we're just seeing less trips themselves, and people working from home, and that has some kind of long-term impacts on things like online spending, home deliveries, and the kind of behaviours that we observe. When people do go out, though, we see that they tend to eat out much more frequently, and you can see there's sort of, whether you look at the full South African database or the Discovery database, there's a 50% increase in spend on restaurants and takeout over the period of the analysis. So it's a really strong growth. You can see the significant dip over COVID, which did occur. But what's interesting is if you look in the middle panel, right on the very right-hand side, at the end of 2022, you see this immediate spike, and that's sort of when the actuaries and the data scientists see that kind of spike, that gets them really excited. And so when you delve into the detail, and you can see it coincided with the increase in load shedding that took place towards the end of 2022. You can actually see, we've been able to plot out the correlation between load shedding stage and restaurant and takeout transaction levels. And while obviously the input costs for many restaurants have gone up because of the need to invest in generators and the cost that comes with that, there's been a significant increase in spend in restaurants and takeout by consumers as well. And if you think about the sort of the impact that segment that industry had during COVID, they were one of the most hard hit. One of maybe the kind of, I suppose, if you were looking for a positive kind of effect on the economy, at least economic activity associated with load shedding, it certainly is evident in that segment, which we thought is quite an interesting insight, and the reason why you see the kind of the almost the bipolar impact of load shedding in the economy across South Africa. And one great example is restaurants and takeout. Just to give you a sense of just the quantum, the increase in spend is about 60% between sort of no load shedding and stage 5, stage 6 in terms of spend on and transactions in restaurants and takeouts. So it is statistically quite material in terms of the kind of the stimulus that it creates in those segments. And then finally, when we look at how people spend, so the sort of the payment systems, payment rails, and look at the kind of just the effect of COVID, you can see in 2020 the marked impact on online, and people were shopping online, and that became almost sort of the primary kind of channel for many people to do their shopping. That immediately reverted back to sort of a pre-COVID level as we emerged from COVID. But what's interesting is that we've seen just a continuous increase in online transactions, that as a percentage of total card spend, and you can see the kind of the strong trend back towards almost the kind of the COVID peaks that we observed. And what's interesting is that it tends to, or the kind of the key driver of that is the 31 to 40-year-old age demographic, where you can see just a real comfort around shopping online and a preference for shopping online. So there are two key drivers that we now see around online shopping. The one is age, and the other is the kind of day of the week, so convenience. So when people are working, so it's Monday, Tuesday, Wednesday, they tend to shop more online. And the second you get to Friday, Saturday, and they're more social and have time on their hands and actually want to go out, you see a significant increase in point of sale transactions. And so you can see the kind of the online offline shift is no longer around what's available and the kind of the offering, but much more around people's lifestyles and convenience factors and the kind of the social nature of shopping over a weekend. So we're starting to get really good kind of insights around these drivers and what we can expect as we go forward. So from an overall kind of trend perspective and where we expect this to sort of play out over 2023. Just leading off those remarks around online, just given the kind of natural evolution of the market and the fact that the online services themselves are becoming far sort of more well developed in terms of the ability to fulfill baskets, and we've actually tracked that as well, the percentage of basket fulfillment on an individual level, and you can see that that's getting better and better, and the offerings by retailers is getting stronger in that space. We expect continued growth in online spend. The continued adoption of contactless payments, and you can see through COVID, Lineshree made the point that during COVID it was around contact and kind of health risk that spurred on contactless payments. We are now nearly 2/3 of transactions in South Africa being completely contactless. So sort of right up there towards the kind of the higher end globally. And what that does is not only make the kind of the payments simple and seamless, but in many cases much more secure, given the kind of tokenization of that contactless payment, but also cashless. It takes us more towards a cashless society, which is much lower cost, much more secure for everybody in the kind of entire value chain. The third trend that we see are the sustained levels of eating out and take out, and I think in the context of load shedding and how that plays out, accompanied by really good service levels that have developed in the segment post COVID. That's an area that we continue to see growth. Fourthly, the expansion of hybrid and almost sort of hybrid becoming entrenched, and you can see that as a result of both the high cost of fuel, but also combined with factors like load shedding and the convenience factor of working from home. We see that continuing, and the two do sort of, or three, I guess, actually do feed off one another, where you have online spend, reliable kind of food delivery, and reliable or sort of seamless hybrid working models. Then you do see that continuing, and then finally that kind of point around travel continuing, but in particular domestic local travel, and that segment growing over 2023, both driven by domestic demand as well as international visitors to South Africa. So that those all position us very, very well. So that is at a very high level, provides you just with some insights as to how the data has been used, some of the kind of, I suppose, the interesting takeouts that we've had. As I said, in the report itself, you'll see just a huge amount of detail that actually underpins all of this. But we're also available to take any questions that you might have on the back of that. Do you want to start with, if there are any questions from online, anybody that is attending online? I don't know, Zinat, how we're going to...
We've got two questions in the chat. I'll read them out for you.
Okay, sure.
We've got one from Lisa Moodley at the Daily Maverick. She's asking, are you differentiating between spend on credit card or spend using actual own money?
So this is all obviously limited to card spend in the analysis, and implementing food cash.
And then one more question is from Maya Fisher French, and she's asking, on average, what percentage are people spending in groceries?
Yeah, I don't have that offhand right now, so we'll come back to you for now.
Thank you. Those are all the questions in the chat. Anyone in the room?
Yep.
Yes. Yes, London. As we're talking about the contactless payment and how it has increased in South Africa, and then we've got PayShap that's launching on Monday, and we spoke about banks internationally buying the travel platforms and people checking in using WhatsApp. And I wonder how far we are as South Africa outside of PayShap as banks to actually be using WhatsApp more to actually get into the part of the population that you just you can't track into at the moment.
Yeah, so I think there are probably a few reasons for that. The one is that today you have got real-time payments in South Africa, which work very, very efficiently. PayShap, I think, will accelerate that even further. So hopefully we'll see the cost of the real-time payments start to really reduce. So I think we've already seen the cost of real-time payments come down quite significantly. And they, in our case, in Discovery Bank, about 60% of all of our payments between or payments by clients are real time. So it talks to the fact that there's one, demand for it, and two, as you bring down the price of real time payments, it starts to replace cash, and so we've seen that PayShap will accelerate it. And that's a good thing. I think that in itself will then lead to embedding the actual payments in social media and other kinds of platforms. You need the two together. So really low cost digital payments, and then that in itself will stimulate kind of the technology that you then referring to. But we need the rails in place first, and then I think we'll see it come on stream quite quickly thereafter.
Julieta, can you see cash disappearing from the banking system entirely, like in 10 years?
So it's happened in some countries. If you go to Holland today, it's virtually 99.9% cashless. So it is, all intents and purposes, it's pretty close to cashless. And many countries, are moving in that direction. I think that we're not there yet, clearly. But if you think about the cost of cash, the security risks that come with cash, there are significant benefits to reducing cash in the system and processing of cash. So I think we're going to continue to see this cashless trend, and I think these are at the leading edge of this. And it happens not just in credit, but debit cards and push payments, and all of these things lead directionally to lower cash kind of reliance in the economy. And we now have digital bank accounts, so low cost accounts, with the prevalence of mobile data across the country. We have the opportunity in South Africa to move quickly to a much less sort of cash-based economy than we've been used to. Initiatives like PayShap will assist that, but you need all of the kind of the different components in place, and I think we do have that. We've got very, very deep mobile penetration, increasing smartphone penetration at low cost, lower and lower cost points, and so all of those you get better penetration, and those are the kinds of conditions that you need in order to then have much less cash.
Do you know what percentage of cash used?
No, not at hand. We can get you that stat.
Yeah, because I think the last time you had.
Yes. And if you got that.
Another kind that we can
Yeah,
but the
we can
cash
get that.
percentage is still quite high
Mm.
across the continent and in South Africa as well.
Okay. I wanted to ask about the online shopping. You said it's being driven by 31 to 40-year-olds, which is interesting because you'd anticipate that younger people would be driving that. Do you know why it is that the younger below 30s are at the same level as above 50s?
Yeah, I think it's a sweet spot of sort of earning and kind of tech.
And convenience
Yeah,
with
convenience.
that as well. And I think as people start to become more comfortable with certain stores like return policies said, so you purchase something and you don't quite want it and you need to return it, you have that comfort that, it's going to go back and you'll be refunded your money. All of those things contribute to why people are feeling more comfortable. But I think when we look at it, it's the convenience of being able to transact that.
No, I'm asking the below 30-year-olds are spending less online
yeah.
shopping than the 30 to 40-year-olds, and that same level at above 50, which I find quite curious. You got to ask me one. Is it just an income issue? You'd anticipate those ones will be like, at the forefront of technology adoption.
Yeah, so I think, definitely correlated with income and family size as well. So you'll see, there in the analysis, there's some interesting analyses of, how spending goes up with family size. And it's almost like the cost per child of, it does add on. So that 31 to 40 definitely looks like it's got, sort of all of the characteristics of higher people increasing their kind of earning capacity, sometimes a dual income household, and being very comfortable with the technology and kind of convenience factor that comes into it.
In terms of the contactless payments, are you able to give us a breakdown in terms of how many of those are coming from your normal tap and go with the card, or your smart devices, or your virtual wallets?
So those types of stats we don't typically release into the in terms of actual percentages, but when we look at contactless, we see it's driving over 50% of all digital payments within South Africa. In terms of exactly what it is on wearables versus through our data set, we will not be able to give that. Hylton, I'm not sure through the
Yeah, we have included some more detailed data, and watches themselves make up a very small proportion currently, and that's just because most people have their phone, and watches have a lower penetration than phones, and most people have their phones with them when they're shopping, and that tends to be the kind of primary mechanism for just behaviourally for using a sort of a digital wallet. What we have seen is that once people do start using the digital payment, so sort of their phone or mobile as their payment mechanism, you see an immediate kind of uplift of spend through that one, and it tends to sustain. And I think we've actually included that in the actual report, just the effect of how almost sort of addictive it is in a sense, and how sticky it is that once you start spending using a kind of cardless or mobile technology, that becomes the primary mechanism. And I don't know, anybody that's experienced it in the room probably feels or has probably exhibited that to a large extent. You never ever put out your card again. And South Africa has moved very quickly in that direction. That in terms of the rollout of acquiring devices, being very, very quick to build the kind of the capability to be able to use mobile payments, and so that's the relay to it.
Could you just give me, I just want to understand about load shedding and eating out trends. Do you have any sort of regional distribution? Where is it most? Are you seeing this more in terms of like the urban areas? Is it more in terms of Johannesburg?
I think it's universal, actually. Yeah.
Yeah, there was no differentiation when you looked across South Africa, and it was just everything.
Yeah.
In looking at takeout, did you consider exclusively going out and getting takeout, or delivery services like Uber Eats and when it comes to contactless payments?
So we did look at them. It is, and we did the analysis separately. So you see that that Mr. Delivery and Mr. D and Uber Eats dominate the kind of home delivery space. We didn't differentiate necessarily between a restaurant that is sort of offering takeout and eat-in. And many restaurants today do both.
Yeah.
And so, the point of sale would actually would often reflect the same way. So it wouldn't necessarily differentiate between whether somebody sat down or whether they had a takeaway. But we do see that kind of aggregation factor come through, and by far the sort of majority of takeout, the traditional kind of definition, are through those two aggregation platforms.
Can I just, on that point of takeouts, so I looked at travel, so they both bounced back, takeouts, restaurant and travel, but takeouts are slightly higher than travel.
Yeah.
And then I wonder how much of it is really driven by load shedding. We've seen the stats, but I mean, with travel, is it because, I mean, food costs, ridiculously these days. You'd expect people to be cooking, but they're spending more on takeout. Is it more because of load shedding?
Well, certainly just at the end of 2022, that was a contributing factor. Yeah, and because of the periods, I guess, that you're looking at, it does have a larger effect in the analysis, because it comes into the period right sort of at the end of it. But I think you can't attribute it directly and only to load shedding at all. There's been I think a strong trend towards people eating out.
Absolutely, and I think we've seen that across the CEMEA region as well as South Africa. So as we move past the COVID pandemic and consumers are becoming more comfortable to sort of go out, we're seeing people actually go and eat out a lot more. And to your point, it is more expensive, but that trend suddenly has taken off. And I think to come back to Hylton's point out, where we saw this update, it was sort of in the last part of that data analysis. So one, yes, could be attributed to the load shedding, and we saw it, right, when we mapped the status. But the second one could also be the period of time that we were in during the holiday period, and that went up.
Hi, Dineo. What is your outlook for grocery spend, given in the inflationary pressures that you spoke to, both for the mass market and the higher end consumers?
So, I don't think we have kind of a pure kind of economics view, but the trend is that it's going to continue to increase, and you can see groceries are forming a bigger and bigger part of the overall spend. So if you just project that forward, that does continue in time. And in the mass market, it obviously crowds out other spend. That's what that's one of the clear kind of findings.
Just to not misrepresent myself here, I'm not Tando, I'm Alexander. It's probably easier to order Greek than to travel to Greece, so maybe that's why the food is a bit higher than travel. But my question was, I know the topic is spending, the spending trend. What's the repayment trend looking like? Are you seeing the pressures of the economy and people having to now allocate food costs to generator costs? Are you seeing people taking strain and repaying their credit cards or paying less? I mean, is there any indicator that the economy is having an effect on the way people are repaying their credit?
So I think we reported results for the 6 months to December last week. Yeah, last week. And credit loss ratios were still very good, and so we hadn't seen that playing through yet. I think that we expect it to start to have an effect. To be naive to think that you have sustained rate increases to the extent that we have, and some of the inflationary pressures that are now coming through, and for it not to play out through into the credit loss ratios. But I think banks are well provided for in South Africa, and we've seen all the banks report really, really good results. And so, I think that the banks themselves have strong balance sheets and are resilient. I think the consumers we've seen similarly, and that's one of the clear kind of conclusions or observations in this report, is the sheer resilience of South African consumers through this very, very complex period. But I think that we will definitely see an increase in bad debts through probably 2023. That's certainly the expectation. It will depend very much, I think, on where interest rates do settle and how those play out.
Okay.
Anything else? Just then maybe to just from our side, from Discovery, just a massive thank you to Visa for partnering with us on this project, and thank you to all of you for joining us here today. We're really excited about the collaboration and the fact that it provides us with, we think, a kind of a framework to actually take it forward. And we hope that Visa will partner with us next year, and then we'll be able to really extend the analysis to give sort of insights as we go and see how the projection in 2024. But thanks so much to everybody. Thanks to you and your team.
Thank you very much, Hylton. For us, it was great to collaborate with Discovery of this. And there's a whole team, that sits behind us, that worked really hard on it. So thank you to everybody as well.
We're available afterwards for any specific questions, but thank you.